Do you see capital controls as sort of being that next step? And do you think maybe this attack on Bitcoin is about capital controls or sort of sealing off that exit?
That very well could be. And I'd say, when we think about capital controls, I think it's really, it really comes down to taxation and tax rate. You mentioned taxes are already pretty high. And inflation actually increases taxes because it pushes you up into a higher tax bracket for the same value, right? And so that is also an effect that does push folks to figuring out ways to minimize their taxes legally. And it also does incentivize people to minimize their taxes illegally as well. I mean, we have to be realistic about criminal activity, especially when it comes to taxes. It's an economic crime. And that's, people are breaking the law based on a very, almost simple calculation is what are my odds of getting audited? I feel like as a public Bitcoiner, my odds are 100%. So it immediately eliminates any funny business from my books. But for other folks who might be leading a more...
You just say that publicly. That's like your public
Yeah,
disclaimer.
IRS, don't bother. I mean,
I'm kidding.
It would be a nuisance. But I'm just speaking realistically, right? That there are people who have a lower profile, who lead a private life, and they might be redirecting some of their capital into Bitcoin because they think that their odds of getting audited are very low. And they also might have such a tight OPSEC that they believe that even if they were audited, that they would, not get caught and not, have to pay penalties and interest and perhaps even face criminal prosecution. So the higher taxes are, the more people are incentivized to try to avoid taxes, and when politicians come out and say, "Hey, Bitcoin is very dangerous because people are using it for money laundering," with regards to taxes. On one hand, I think that they're wrong in the sense that I don't think a lot of people are doing that today. On the other hand, maybe it's counterproductive for them to be advertising this as a way of evading taxes because it very well might give people ideas, right? You're essentially explaining to the public, hey, you should look into this technology for tax evasion that makes our jobs really hard. So we'll see how that develops, but nevertheless, I think that from a government perspective, they want to close the exit doors. So the way they do that with Bitcoin is with KYC AML.
Let's stay on the tax thing
Yeah.
for a minute before we jump to that. So on the tax thing for a minute, I'm curious to get your take. I think most people are willing to pay a fee for something they perceive to have some value. Like we'll pay to go to whatever Disneyland, and because we see that there's perceived value there. But at some point, it's like, hey, it's just way too high. And like in California, marijuana has been legal, both recreationally, medically and recreationally for a long time, because they put this massive tax onto it. And they tax it anywhere from 38% up to over 50%, depending on where you're at in that supply chain. And it's estimated that like 70% of marijuana in California is still black market, because the tax is so high that they can't even be profitable at that level. And so like, it seems like maybe if there's a low enough rate, like people are willing to do with it, but I guess the higher the pain, the more they're willing to risk themselves of getting audited, go to prison or whatever that may be. And so we can see that over. But would you agree that you think, people are willing to pay sort of a fair price, whatever that may be, and the higher it goes, probably the more willing they're looking, or the more they're looking for some sort of an outlet?
Well, I think that then it depends on the spending side, mostly, right? Because ultimately, the reason why taxes are so high is because there's these massive transfer payments. And so as long as politicians continue to auction off votes to the highest bidder, then there will be a need to have high tax rates. But if that was not the case, and frankly, I don't think... If the government had to run a balanced budget, I don't think that they would be able to raise taxes, to get to that $6 trillion number. So is there a low enough tax rate that people just voluntarily pay it? Yeah, absolutely. I mean, I think that or at least are not so motivated to evade it. And perhaps even just their feelings of patriotism and nationalism would be sufficient to pay, 1%, tax to the government. But the government wants 40 to 50% because they've got votes that they need to, pay for. And so then it really calls into question the form of government, right? Maybe, yeah.
But real quick, kind of back to this MMT thing. So, I mean, if they're printing $2 trillion, the question people ask all the time is, if they're printing $2 trillion, why do they need to continue to tax us or increase taxes? I mean, why not just print $3 trillion?
Yeah,
the
because it's
income
punitive,
tax is
right?
only 2.4. Like, just print the extra trillion, lower taxes.
It's not sufficient for their ideology to lift people up. Their ideology also requires tearing people down, right? That one of the sayings they have in France, which really I think is the root of quite a lot of Marxist thought, is behind every great fortune is a great crime, right? So from the Marxist worldview, any accumulation of wealth is the result of the exercise of power, of arbitrary power, of essentially exploitative, criminal type of behavior. And so the purpose of the tax code isn't so much to raise revenues for the government, because they can, as you point out, they can already do that by printing money. No, the purpose of taxation is to take wealth away from those who really got it in a way that is probably dishonest, right? from their Marxist worldview. Now, from my worldview,
Right.
if you followed the natural law, if you respected people's property rights, if you were a good and honorable businessman and you've made a profit, that is a indication that you have created value in society. And so that I think is just a complete diametric opposite of kind of the Marxist worldview. And so we're just going to come to very different conclusions on the necessity of tax. Because I agree. I mean, if we lived in a world where the government debased the currency by 0.5% every year in order to pay for the national defense and the administration of justice, I wouldn't really have a lot of problems with the U.S. dollar if that's just and then we didn't pay any taxes, right? It was just kind of a slow, and really it would be an imperceptible debasement of the currency, but. That would require humans to be angels. That would, that would require them to not have any flaws of pride.
Yeah. And greed.
Yep.
And all those other
Yeah.
things. So then let's talk back about then sealing off the exits, so to speak. You were just about to go into sort of KYC, AML, things like that. Is that to sort of lock it in, or this is just, it seems like all of these FinCEN, like every one of these, Bank Secrecy Act, et cetera, are sort of about the Treasury just sort of seeing every single transaction and more kind of like protecting itself from what may be going on there? Or do you think it's more about, like I said, sealing off those exits and trying to trap it in?
I think that it's both. I think that I think most important to them is having the ability to turn it off. So if they feel like we're in a parabolic bull market, they want to have an off switch that would stop all flows to and from exchanges. And so that way they would be able to stop a stampede, right? A kind of a run on the dollar. I think that's their policy objective number one. And then number two
Interesting.
is
I don't know if I've heard that one. I don't know if I've heard that one, Pierre.
yeah,
So
it's like
similar to maybe how people believe they've manipulated the price of gold. They don't want gold to go up too high because people will stampede into gold. You're saying that they probably kind of want to be able to put a reverse circuit breaker. They have circuit breakers on stocks going down. They want a reverse circuit breaker to keep Bitcoin from going up too fast.
that's right. And just like they want a kill switch for the internet, right? They would love it if they could control things so that they can turn off the internet. We saw this with the Twitter files. They were showing, the amount of cooperation going on between the government and this private corporation in order to stop narratives, right? They want to be able to control every aspect of our lives. And so they want to be able to control whether you can buy and sell Bitcoin or not. Because from their perspective, there are times where buying Bitcoin is innocuous and, they'll look the other way, but other times where it threatens their monetary sovereignty. And so when and if Bitcoin is, causing a run on the dollar, they're going to want a way to rug people and to not only shut the doors, but also seize the Bitcoin on the exchanges, for example, right? That they'll want to, and perhaps even seize the Bitcoin from the ETFs. The only thing stopping them from doing this will be the political system. Yeah.
Wouldn't any global commodity sort of be the same thing though?
If it was rapidly increasing in value,
stampede into uranium, or
yeah, I mean, if it was 10xing every, or 100xing every 4 years, then there would be that amount of attention around it.
Got it.
It's like, the market today, we're approaching $1 trillion of market cap for Bitcoin, fully diluted. Subtract out the missing coins, and all of that. We're probably more like at $500 billion, let's say. 10x, 100x, you're talking about a real macro asset in the trillions of dollars. And so to them, this is their last chance, right? That they see this horse running out of the barn and they're trying to close the door as quickly as possible, because once you're in the multi-trillion-dollar category, well, then you're a real macro asset. But the problem that they have is they've got a lot of problems with this. One of them is about international cooperation, right? That ultimately, if they only close one door and there's 130 doors, then they haven't really accomplished anything.
Yeah, exactly. That's the global coordination where I was mentioning earlier, like even like this minimum global tax kind of a thing, right? They don't want, they're trying to seal off all those exits. So, I mean, that sounds reasonable, I suppose. They're concerned about money flowing out capital controls into any of those assets, but they're not really worried about any of those moving up at 10x. Bitcoin seems to be the one, so they need to put some things in place. And I suppose even moving into these other global commodities would require either equities or futures, and they do kind of already have the controls over those, so they just don't have the controls over this asset. So Elizabeth Warren running on this anti-crypto campaign. She was before, obviously she still is. I asked ChatGPT, when has any politician from the United States ever run on a campaign to take away freedoms? And it said, like, never. No one ever would. Like, it's the land of the free. But yet here we are. And her latest bill seemingly wants to sort of make Bitcoin, I guess, and crypto, but Bitcoin's almost like unusable. Like, it's like unrealistic what she's asking, which might actually then make it, I guess, illegal to even use it that way. And do you think that's like just a bigger piece of trying to somehow put it into a box and make it where they can kind of control it?
Yeah, I think that Senator Warren represents kind of the extreme fiat maxi position, which is that Bitcoin should be shut down immediately. Rather than just having a kill switch, right? She wants to smash kill that button. And so, from her perspective, she wants that to happen as quickly as possible by any means necessary. I think that she is frustrated by the moderate fiat maximalism displayed by the White House, where they're actually, they're critical of Bitcoin, the energy usage, the money laundering, etc. But they are not ready to ban it, right? They could try to, like they added Tornado Cash to the OFAC list. They could just add the Bitcoin network to the OFAC list. And that, I think, is probably what Senator Warren would like for them to have done months ago, if not years ago, and ban everyone from all U.S. persons from using Bitcoin. But I think the White House and the executive branch kind of sees that she's an extremist or radical and hasn't really gone along with her plan. And that's why she has to write letters, right? So senators who are able to exercise power and, influence others, they usually do it behind the scenes, in private meetings, over a steak or something like that, or over a tofu burger if they're, progressive. They don't do it in letters where they're like uh, they resort to letters when they feel like they're not being heard. And I think Senator Warren feels like she's not being heard by the current White House on this particular issue. Now she has a lot of other issues that she'd like to work on, so it's not like the end of the world. But we she also I
But
think
do you
yeah.
think like Elizabeth? Go ahead. Sorry. Go ahead.
Oh, I was gonna say that I think day to day it's top of mind for her, and so anytime something happens anywhere in the world in the news, her immediate thought of if it's something bad, how can I blame Bitcoin for it, right? So if Hamas commits horrible atrocities in a terrorist attack, her first thought is not one of humanism or philanthropy, but rather how can I blame Bitcoin for this tragedy? Which is pretty disgusting, but it shows that it really is a high priority for her, and that from a policy perspective, I think she understands that there's some urgency to having her view adopted, because if it's not, the horse has escaped the barn, right? And it's too late to close the door.
What I was going to say is, I mean, she's head of the financial service committee, whatever her title, official title is. But if you sort of look at the way the laws are done in the United States, most of these, Congress and their House members are not writing the laws. They're kind of given to them by lobbyists that they'll put their name behind. And then you look at the financial services sector as, some of the bigger lobbyists, obviously behind pharma, but big lobbyists nevertheless. And then you look at, now with all these ETFs going through, the BlackRocks and all these others that are now building in Bitcoin specific products. Like they all want a piece of this. And they've probably spent billions of dollars at this point to get them to where they're at to launch these Bitcoin products. And you would think, besides the entrenched people inside the government, but just the financial sector alone, you would think has so much invested into this. They want it so bad, they would probably be giving a pretty good amount of pushback on this as well. I mean, aren't they her big donors?
Perhaps. I mean, I think that I think that Elizabeth Warren, Senator Warren, has an earnest opposition to Bitcoin. I don't think that it's driven by her donors. I would argue so far as to say that it might attract donors that she has this position. But I think that first and foremost, she's an ideologue on this point. And that her and her staff are the ones writing these bills, not lobbyists, I don't think. Now I do think that the banking lobby, when they see some of her bills, they are drooling, because I think commercial banks do see Bitcoin as a threat, whereas large asset managers and investment banks do see it more of as an opportunity, as you mentioned. So I think that within financial services, there is some tension between different players, those who would be able to issue an ETF and earn fee revenue, versus those who would not, like JP Morgan Chase, for example, right? The smart move for Jamie Dimon would be to enable people to trade Bitcoin from their checking account at Chase, right? Where you can just convert in and out of Bitcoin and deposit and withdraw Bitcoin at Chase. And thus make it so that the ETF is really a niche product, right? Because then they're mainstreaming Bitcoin. But he can't think that far ahead, because that would be cannibalizing kind of his fiat business as well, in a sense. And also, I think, would get in trouble with the regulators. I think that at the federal level, a lot of the banking regulators probably do have ideological opposition to Bitcoin, or at least don't want to get in trouble, right? Hey, this asset is associated with criminal activity, so we don't want you enabling your clients to deposit and withdraw Bitcoin. So I think that there's conflicts of interest within financial services, and that Elizabeth Warren, I think this is really personal for her. That she's out there lobbying other senators directly, of saying, hey, I'm begging you, please support my bill so that we can effectively ban Bitcoin, right? It's not so much that when people say, hold on, this bill is too restrictive, her response is, yeah, that's the point. I'm trying to make Bitcoin illegal
Yeah.
so that I can have unlimited inflation for the US dollar. So that we can go about doing our fiscal and monetary policies without having to worry about people controlling their own money.
Yeah, it just seems like you brought up some great points, and if you think about the ETFs, so the part of Wall Street that's sort of on board with that, but even Jamie Dimon, what they all might want is to take away personal self custody and make all custody go through a third party. Because then Jamie Dimon and the banks and then the ETFs could all benefit from that. Do you think that's and in Europe we're seeing that kind of coming full steam ahead? Do you think that's probably the most probable sort of attack vector they'll go for, that self custody piece?
Yeah, I thought about this a lot while I was working at Kraken, and it's interesting because as a financial intermediary, whether it's if you're just doing 100% reserve banking or if you're actually, lending out Bitcoin or whatever it is, you want to attract deposits. You want people to send Bitcoin to your platform. And so it really does actually create an interesting incentive that, if people feel like if sending their Bitcoin to your platform is going to cause those Bitcoin to be trapped on your platform and unable to withdraw, then they won't send their Bitcoin. And so it actually is an interesting incentive to, keep some freedom there.
Unless it was made illegal like gold was, right? Where it's like, hey, now you can't own gold, kind of a thing. A lot of people maybe don't want to break the law.
But maybe the thinking there, though, is that at the time, most of the gold was within the system already. Today, all of the Bitcoin could flow out of the system very quickly. And, I'd say maybe 20% of the Bitcoin are in the system. So we'll see.
Yeah. Your work on the mining side now with Riot, and I know you did this piece kind of combating sort of this FUD that the New York Times had put out. It seemed like there was a lot of just nonstop attack on Bitcoin mining from an environmental perspective, using too much energy, polluting, CO2, blah, blah, blah. They obviously, that hit piece came out. You made sort of a kind of a hilarious kind of a retake on that video, which I thought was really cool. It seemed like that maybe sort of the narrative was shifting on that. And I haven't really seen as much sort of like environmental FUD, and we see more energy companies sort of getting into Bitcoin. Seems like I thought maybe there was a shift. And then we saw this piece come out about it using too much water. Where do you think the acceptance is of using Bitcoin sort of in this mainstream sort of energy environment? Is the FUD still there? Is it slowing down? Is the narrative shifting?
Yeah, I think that all of this is downstream from the fact that they don't like Bitcoin. So because they don't like Bitcoin, and not only do they not like Bitcoin, they really despise Bitcoin. I mean, they hate it. And so with that loathing in their heart, they look for reasons to try to persuade others to also not like Bitcoin. And so they look for the easiest ways to go about doing that, right? What's kind of the most persuasive? What's kind of the lowest cost way of persuading someone to be anti-Bitcoin is to look at Bitcoin mining and the energy use there. So it really, if Bitcoin did not consume any energy, they would find other reasons to criticize Bitcoin, right? And we've heard them, right? Bitcoin's too volatile. Bitcoin's only used by criminals. They have a very rich catalog of critiques of Bitcoin. And I would argue that you take any topic in society, and if you set your mind to it, you can maybe even ask ChatGPT, hey, help me find criticisms of this activity. For example, let's say I don't like basketball. Okay, not only do I not like it, I really hate it. So first of all, it's just people running around. It's a complete waste of everyone's time, right? It's a waste of all the electricity of building a stadium. I mean, the carbon emissions of transporting all these spectators to the stadium just to see people running around. And then you have individuals making millions of dollars just to throw a ball into a hoop, when my 10-year-old son is doing that, right? So you can have a negative attitude about any topic imaginable and spin it in a way that really just makes it indefensible, right? That oh yeah, we should totally shut down basketball. Professional basketball should be illegal because obviously it's a waste of resources. And so, and people say, well, what about, hey, it's good exercise. Yeah, you can just walk around, right? You can just run around. You don't need a $100 million stadium to get some exercise. Um, in any case, so because they hate Bitcoin, they come up with all sorts of reasons. I mean, the most absurd one is most recently the water usage. The water usage for Bitcoin mining it's immaterial, right? If you look at the water usage for golf courses, it's just multitudes of orders of magnitude greater than the water usage for Bitcoin. But so even if you addressed all of these criticisms, though, ultimately, because they don't like Bitcoin, they'll still come up with more, right? Eventually, they'd get around to the fact that Bitcoin mining does not use enough water, right? Or Bitcoin mining does not use enough electricity. In fact, some of Bitcoin's critics are already there, right? They say that Bitcoin's not secure because it doesn't use enough electricity, and that transaction fees have to be higher. So, in any direction, it kind of gets into horseshoe theory of like, okay, we get it, you don't like Bitcoin, so you're going to take whatever the status quo is, and you're going to find ways to spin a narrative about how it's bad. And it's not going to be driven by data. It's going to be driven by emotions. So I think that's where we're at with the Bitcoin mining debate. I think it's important to have fun with it and to kind of mock and ridicule them because really they're never going to be persuaded by the facts. But it is also important to state the facts because in the audience, the people watching this debate, they are interested in being persuaded. And so they do want to hear kind of what are the arguments for and against Bitcoin mining. I think the facts are on our side ultimately. And so it is important to, in addition to ridiculing these people for having kind of absurd takes like swimming pools of water being used for Bitcoin mining, we also have to hit back with facts. And I think the number one fact that Bitcoin mining's critics kind of avoid is they'll start with every Bitcoin transaction, burns down a forest and consumes all the electricity and, uses a swimming pool of water. And the Bitcoin proponents hit back with, hey, look, that's not realistic because the block reward, the mining reward, has two components to it. It has the transaction fees, which actually are really low. So if you look at it on a per transaction basis, if a Bitcoin transaction costs $2 and 40% of that goes towards electricity, when you perform a Bitcoin transaction, really you're consuming. I'm trying to do the math quickly in my head. 80 cents of electricity, right? You probably consume more than that watching your TV show at night on Netflix. Where is the rest of the block reward coming from? It's coming from the subsidy, right? New Bitcoin being added to the ledger. And really, that's 98% of Bitcoin mining revenue at this point is the subsidy, right? It's new Bitcoin being added to the ledger. That is what gets cut in half every 4 years. And it's completely unrelated to transactions. So even if there were very few transactions, you'd still have these new Bitcoin being added to the ledger. Now, what's interesting to me is that, first of all, Greenpeace and all these other activists, they could be lobbying for a soft fork in order to remove the subsidy. That would actually that is soft forkable because you are restricting the rules of Bitcoin rather than expanding them. But again, they don't like Bitcoin, so they don't really want to solve the problem that way by actually directly reducing the revenue going to miners and thus directly reducing the resource usage of proof of work. But they also don't want to have the debate about seigniorage. Seigniorage, monopoly seigniorage rents, profits are basically what the government earns by printing money. So if printing a $100 bill costs a penny, then they earn $99.99 of value, right, of seigniorage profits. And the reason why they have a monopoly is because of counterfeiting laws. So if you try to compete with the government in terms of creating more dollars, they'll put you in jail. With Bitcoin, it's an open competition. Anybody can spin up their Bitcoin miner and be able to create new Bitcoin. And the rules for that are set by the Bitcoin nodes. And so by that permissionless nature, that means that there's not any kind of monopoly profit off of the issuance of Bitcoin. It's a highly competitive process. And in fact, it's a brutal industry to be in. I'll say that as a Bitcoin miner. And so that issuance of Bitcoin, I think, differentiates Bitcoin on an ethical and moral level from fiat. That Bitcoin is not created out of thin air by somebody who has a legal privilege that they've granted themselves, right? But rather through an open and competitive process that is, frankly, egalitarian, and I would argue closer to democratic ethos than the Federal Reserve certainly is. So by making the issuance of currency participatory with a cost attached to it, that really is very innovative, and they don't want to debate that topic, because then when you say, "Hey, look, we'll look at consuming less electricity if you guys would allow anyone to issue dollars, and you'd have an open source node software for the Federal Reserve," they don't want to negotiate in that direction.
Yeah, definitely. Let's talk about the Bitcoin mining and sort of like the future, where you see it going. It seems like it's solving a lot of problems in the energy sector specifically, load balancing the grid, but even potentially maybe in the future helping to create new energy plants or forms of energy, subsidizing that. And maybe we're barely even scratching the surface. So everything has a cost-benefit analysis, right? So there's pros and cons, and it seems like we're starting to see a lot of the pros of the Bitcoin mining as opposed to just looking at the cons of the past, so to speak. What kind of future do you think Bitcoin mining has in the energy sector? I'm sure you spent a lot of time thinking about that. And how do you think it revolutionizes that?
Yeah, that's a great question. So I'd look at practical case studies at every scale. So at the smallest scale, you might have somebody who just wants to heat their pool using a Bitcoin miner. And so this is a situation where you don't need steam. You don't need a high heat, right? You just need a low warm heat. And Bitcoin mining is actually really great for that, just because of the temperatures involved. So I think that I'd like to see more products commercialized around finding ways that are kind of mutually beneficial for Bitcoin mining at a residential level. Whether it involves, plugging into the grid or solar and batteries.
On that note, I don't remember his name. There was a guy I met at Bitcoin Miami last year who is from France. You may have heard of what he's doing. I don't remember the name. And he's in France, which they have nuclear, right? So the majority of all the energy in France is electricity. And he's taken old S9s, bought them by the ton, harvested the chips off of them, and taken space heaters that people buy. So you can buy space heater $1, $100, space heater $200, space heater $300. Space heater $400 gives you a rebate on your energy. And he's built a Bitcoin miner into it on old S9 chips, and you plug it in just like any space heater. You could connect it to your Wi-Fi. It mines Bitcoin. He doesn't even tell anybody it's mining Bitcoin. They just know they get a discount on their energy bill. And you think about that sort of a model, and so any of these appliances that I have in my house that are running, I already have to buy electricity for them. If I can just get a little bit of rebate, I don't have to think about it running it profitably as a business, but if I can get a rebate, a discount, it sort of makes sense. Seems like kind of a good model. I don't know, is that kind of what you were thinking?
Yeah, absolutely. So I think that we'll see that continue to develop. I think that there's lots of entrepreneurs tackling that challenge. At a slightly higher scale, you have also quite a few players in this area of stranded energy. So if you have lots of land in Texas, for example, you might actually have oil drilling on that land, and you've sold the mineral rights, or you've leased it out, or whatever it is. And oil is actually a lot easier to bring to market than gas is. because a liquid has greater density. So it's just easier to transport crude oil than it is to transport gas. So quite often what ends up happening is that it's just uneconomical to transport the gas to market, and so they flare it and they burn it. What you can do with Bitcoin is that you can actually convert that gas on site using a generator into electricity and then consume the electricity on site. So you don't have to build out transmission lines and lots of infrastructure. You just drop a little a hut or a container next to a well that is producing excess gas, and then you're able to monetize that, for electronic cash. Now, that is being done, at lots of different scales. Then we also, look at kind of the development of smaller grids. So a smaller grid, it might have over a generation of electricity, right? So they might have built a dam, for example, that is really for a small village, but due to the nature of the infrastructure project, it's overproducing lots of electricity. And if you're able to attach Bitcoin mining to that, you might actually be able to help lower the cost of electricity for everyone else because you're spreading the cost of the dam over a much greater rate base than you were before. And whether it's wind, solar, batteries, any kind of power generation technology, you can apply this concept to of amortizing kind of the capital cost over a greater base of load using Bitcoin mining. And that's going to actually deliver lower electricity bills to the community that it's being operated in. Now, at the large scale at which Riot operates, we have a facility in Rockdale, Texas, rural community that's connected to the ERCOT grid. The ERCOT grid is Texas's electricity grid. It's depending on what measure you're looking at, it's between 60 and 80 gigawatt grid. It's one of the largest grids in the world. And there it really is about finding ways to offset other technologies. So in Texas, we have a lot of wind and we have a lot of solar and we have a lot of natural gas. And so when there's lots of wind and lots of sun, electricity prices can be negative or $0 in real time. But if that wind dies down and the sun sets at the same time, you have to have tens of gigawatts of natural gas power plants turn on in a very short amount of time. And there also can be situations where you just don't have enough natural gas power plants for the amount of load that is on the system. And so when you have imbalances like that, that's where Bitcoin mining can be very valuable to the grid because Bitcoin mining is a uniquely interruptible load. And also, it has a very low strike price from a financial perspective. So typically, let's say ballpark, the strike price for Bitcoin miner might be $100 to $120 per megawatt, which, is 10 cents to 12 cents per kilowatt. So from a residential perspective, we're talking about pretty low prices. And anything above that, a Bitcoin miner, their marginal economics are telling them to curtail, to turn off their load. And so I'll contrast that with kind of a typical firm load will not turn off even at $5,000 a megawatt. So even if we're talking about orders of magnitude greater electricity price, people don't want to turn off their AC if it's 110 degrees outside, right? It kind of doesn't matter what carrot you put in front of them. They want to leave their AC on because that's really the biggest problem they're facing right now this past summer. It was too hot. And so rather than having people turn off their AC, have all these Bitcoin miners turn off their mining rigs, and they're economically incentivized to do so because the electricity price is above their break even. On top of that, quite a few Bitcoin miners, Riot included, pre-purchase their electricity. And we do it at a fixed rate. So that means that even when electricity prices in real time are $0 due to overproduction of electricity, we're still paying, let's say, this is not right, but hypothetically, $40 per megawatt. And so it's essentially providing a guaranteed revenue to the electricity producer um, in kind of the shoulder off-peak hours. And then during the peak hours, we sell that electricity that we pre-purchased back into the wholesale market, and that allows us to turn off and to essentially free up electricity for others. And so Bitcoin mining is really effective at balancing the grid between the off-peak hours, where you're producing too much wind and solar, versus the peak hours where you're not producing enough wind and solar. And you have to have some other offsetting mechanism. Another potential offsetting mechanism would be batteries. Batteries have the problem that they don't consume a lot of electricity in the shoulders, off peak. And then they also have the problem of being very expensive because of that. And so Bitcoin miners are far more affordable way of balancing the grid than batteries are. But I also think that we'll see a continued need for peaker plants, for natural gas power plants that really have a sweet spot in terms of being low cost, but also of being pretty fast. But they're not as fast as Bitcoin miners, and they still are more expensive than Bitcoin miners. So, yeah, that I would say it's kind of the range of use cases for Bitcoin mining.
Yeah, I mean, it seems pretty revolutionary to me because, to your point, we need this high base load. When I want my AC, I want my AC, and that's it. So we need that high base load, but it's not needed all the time. So then what happens to it while it's not being used? And so kind of have this variable load that you can tap into seems pretty revolutionary. These natural gas peaker plants that you talk about, they're only being used in time when they need to be used, but you have to still pay the fixed cost of building them. So then your cost is whatever it is, X to run it. But if it's only used, whatever, 50, 60% of the time, then when you sort of break that down by the use case, it's very expensive. Potentially they're losing money. Even those peaker plants could be mining Bitcoin in their off hours in a sense, right?
Yeah.
Do you think that is something that will do? And I guess the question I would ask is then, like, if you have to build these plants, even though it's only being used a fraction of the time, whatever that time is, which means, maybe somehow in the economics they work it out to be where they're profitable. But if they could be mining Bitcoin in that downtime, like, why wouldn't they? And then does that sort of change the mining space as we know it, where these companies are sort of losing money? And so why not just lose less as opposed to miners that are trying to go 100% for profit?
I mean, I think Bitcoin miners will always be for profit. I think, though, that the real, in my mind, it's, the Bitcoin mining load is going to go to wherever it's least expensive at scale. And I could foresee a scenario where Texas is the least expensive at scale long term, driven by a combination of factors. One is the wind and solar, right? That this is a region that gets lots of sun and has a very significant wind corridor going through it. The second is the natural gas, resources that are within Texas, and the third is the institutional context, right? The property rights, the legal system, and all of that contribute, the regulatory environment that contribute to kind of a constructive approach of, hey, let's develop a win-win solution here, because ultimately this is a win-win. And that combination of factors could mean that Texas ultimately has a disproportionate amount of Bitcoin mining load in it, and that all those peaker plants end up getting converted into very efficient combined cycle gas turbines that have a boiler attached to them and heat reuse for them, and so essentially that they would be on all the time, and that the only way that we have peakers, quote unquote, is by Bitcoin miners curtailing and letting that electricity from those power plants go out onto the grid instead of off taking it. So I think,
Right, but
yeah.
let's look at it like in California. We have a tiered energy system. At the top tier in summer, it's over 40 cents a kilowatt. I mean, it's insane, right? And we're still running out of power in the summer, having rolling blackouts. So in California, no Bitcoin miner would ever want to mine in California at 40 cents per kilowatt hour. You wouldn't want to do it. But if you have a peaker plant that's sitting there that's only running 50% of the time, why wouldn't you mine Bitcoin on that peaker plant for the 50% of the time that it's down?
That's right.
And so while the power cost isn't economical, well, it's not being used anyway, so we might as well use it. I guess that's sort of what I was thinking.
Yeah, no, that's entirely correct. I think that what that causes though is that the peaker plant ends up making investments so that it can run 100% of the time, because these peaker plants are built to be peakers, to run a smaller percentage of the time, and so converting them into combined cycle plants increases their heat efficiency, and so they can more efficiently convert natural gas into electricity, and so a peaker might have twice or its efficiency might be 2 times worse than a combined cycle gas plant, and so but it's a big capital investment, and to your point, it's only justified if you have a load that is going to kind of be there to absorb that excess supply 24/7.
And the point I'm trying to get to or ask about is no one's going to mine in California at 40 cents a watt.
No.
But if there's a peaker plant that's running at less than 100% capacity, why not mine in the difference? They're not competitive with pricing of running in Texas or peaker plants in Texas. But what does it matter? They have extra capacity that's sitting there. Why don't they mine? And so I guess the point or the question I'm trying to get to is like potentially seeing states like California being the worst, but maybe other states mining non-economically, meaning they're willing just to lose less than they're losing now, I guess, was my thought or my question. Maybe it's too big of a hypothetical, but
Yeah, no, I guess I would just I don't know. I think that there will continue to be a profit margin for Bitcoin mining, but there is an open question as to what the long-term profit margin will be, but it is I think the bigger, in my mind, the bigger picture really, and what has driven profit margins historically for Bitcoin miners is about the price cycle. And that if the Bitcoin price starts or continues to go up like it has been so far this year, that price appreciation is happening more quickly than the difficulty can increase, because Bitcoin miners just can't build fast enough to keep up with the Bitcoin price, and so that causes margin expansion, profit margin expansion for the miners in the short run, and then in the long run. I find it interesting that people talk about the halving as, what a crazy industry to enter into, right? That your top line revenue gets cut in half every 4 years. But I also think that keeps the tourists away. It kind of keeps the industry nice and lean, that you don't have people who, think it's a free money spigot. They are interested in kind of having the lowest cost of production.
Washes them out in the down cycles. Man, we've covered a lot of ground. I think maybe that's a good place to sort of tie it off. I wanted to get into sort of this speculative attack on Bitcoin, but I think maybe we kind of talked about that a little bit in the circuit breakers of being able to shut that off. That's what they're afraid of. But I think, I think that's probably a good place. We'll go ahead and tie it off right there. Is there anything else that we missed?
Well, I could talk with you all day, Mark. Really appreciate your questions. I think that it's always an insightful conversation with you.
Yeah, thanks, Pierre. Check out Bitcoin Pierre on Twitter at Bitcoin Pierre, VP of Research at Riot Platforms. I have not been on Twitter for over 4 months because a hacker got in, changed my 2FA, and I can't get them to reset my stupid Twitter account. I'm so mad.
Yeah, I had to create a new one at one point.
I'm taking a break.
Yeah.
Oh, you did?
Yeah, it's frustrating, but
Yeah, so I'm taking a break. But anyway, check out at Bitcoin Pierre, Riot Platforms. Anywhere else I should go check you out?
No, that's it. Thank you, and y'all have a great one.